Alright, so in this video we're going to talk about rocket companies. They recently had earnings, and as you can see, when they announced their earnings, you had a slight rise in price from roughly $12.70 to close on Friday at $13.30. However, price went as high as $13.93. Now, before we continue with the analysis, I do want to look at the actual results. And with that said, so Rocket Company, a leading fintech platform company, reported significant earnings beat for the first quarter of this year. Now, the CEO, Varun Krishna, attributed the quarter's success to the company's accelerated top-line growth for the third consecutive quarter and its highest profitability in 2 years. Krishna highlighted the company's market share gains in both purchase and refinance sectors, driven by innovation and effective technology utilization. Now, forward guidance, as it's always about the forward guidance. Looking ahead to the second quarter of 2024, Rocket Companies has provided guidance for adjusted revenue to be between $1 billion and $1.2 billion, which falls slightly below the analyst consensus of $1.25 billion. Alright, so now let's get into the actual chart analysis, and we're going to start with the monthly chart. And price is more or less in the middle between buyers and I'm going to say sellers. Why am I picking $18 as a level of sellers? Well, again, this is the monthly chart. So in the past, we had support, which became resistance. So this is really the next key level that I'm looking at in terms of a target. Now you can see for the past several months, price has been range bound, and below another key level at $11, you have this beautiful daily bias level at $10.50. Now you can't see it because, again, this is the monthly candle, and this candle represents a monthly 30 days. So we'll drill down and you can see that level a bit better. Guess what's also worth noting, you do have a little level of interest at the $15 level. Again, support, resistance, now resistance, now resistance. So prices range around between $11 and $15, and will be until catalyst causes price to breach and break and close above or below. Drilling down to the weekly chart, you can see how price has been range bound once again. You have sellers here. You have a rally base drop, so you could say that you have a weekly sellers level here at $15, supported by this support resistance, right? And then down below, again, resistance, resistance, resistant, pokes his head above, pulls back. Now, once you get a substantial close above, it becomes support, right? Now let's look at this level on the daily chart. Alright, so I combined two different levels. You have a rallying price, base and candle, rally out, base and candle, rally out. So rally, base, rally, base, rally. Combining the two levels to make a single zone. Now this is also known as a bear trap, right? For those support and resistance traders. Again, price is range bound, but what the support and resistance traders are going to do is, for example, if you get a break to the downside and closes, you're going to get sellers only to be met with buyers. And you can see how these levels, that's a candle established on decent volume, and then the leg out is also on above average volume. So not a bad zone, not a bad zone. Nevertheless, no trade set up at the moment. Play the extremes. Short at the weekly sellers level, buy at the daily buyers level. Thanks for watching. Subscribe. Please like the video.